closing bell on the 5th of February. Today we're going to have a look at the situation out there with bonds really starting to sell off, which I think can be that next pin to drop, which could accelerate the correction that's already got started. We had Europe coming out and saying that inflation's heading up and that they're probably going to raise rates. We've had the UK raising rates 25 basis points. The US 10 years actually started to sell off on the back of that. So that's a bit of a development during the week, which I think we need to watch because I have been showing you those 10 years in the US 10-year yield chart, showing you that if they hit above 1.9%, I'm a bit concerned they can really sell off and those yields can spike quite dramatically. And with the way equities are looking, that could be the thing that really knocks the stuffing out of stocks, especially those tech stocks. We saw some huge volatility. So I'm going to get into all of that. But before I get going on that, I just want to have a chat about the fact that I'm doing a presentation next week on Thursday. And I really want you guys to join that. It's basically being reserved for paying clients of Fat Tail Investment Research. But I want to give you a chance because you guys have been watching these videos. Hopefully you've been following along with me, the fact that I've been telling you about the correction for months. Look, I've been bullish oil. I've shown you a few different stocks here and there. So look, hopefully you've got the idea now, a bit of a sense of what I do and have your own picture in your mind of whether I'm worth listening to. And if you do like my stuff, I'd really love you to just check out the presentation where you're going to get a much deeper insight into my strategy. I'm also actually going to give you my most recent actual trade that I sent to my members in Pivot Trader. So you get that free of charge just for turning up on the day to watch that presentation next Thursday. So, you know, that's not a bad outcome. And it is actually a 3-star conviction trade for me. I do them very rarely. I've only got 3 conviction stars that I do. I usually do 1 and 2-star conviction trades. I keep the 3-star conviction trades for very rare occurrences. And I only did 2 last year all up. And so this trade is actually a 3-star conviction trade in a small company with a market cap of around 275 mil, which I think has got big things afoot over the next couple of years and will be multiples higher. So if you want to get that trade, all you got to do is turn up to the presentation and look, we'll put the link in the video. It'll be just up here. Please click on that link and go along there, register for next Thursday. We'll remind you before it happens and you'll be able to watch the video, I think, after the time. But, you know, turn up on the 11 a.m. next Thursday to watch the Prezzo and, you know, that's it. So I really do hope that you could join me for that. I've been doing all this work for you, giving you these free videos for a long time now. So I reckon if you really do like what I'm doing, look, why not discover a bit more about it? So yeah, register for that and I will chat to you next week in that. So let's have a look at the markets now and check out what's going on. I wanted to start with this chart, which is actually the high yield bonds in the US. So the junk bonds, that sort of thing. They are starting to sell off. So I'm just interested in following them now. This chart actually goes back to 2009. So when credit markets start to fall apart, that's when you've got to worry. And you can see we had the crash in 2009, a big recovery in these high yield bonds. And look, over the last few years, you'll see that we had the crash in 2020, and then the bonds recovered. But what I want you to watch is the fact that we've got this channel which has been going on for this past 10 years. And so it really is in a bit of a downtrend, those high yield bonds. If we're just following the way this is moving, you'll see there, we could even look at that wave there really. And then we've had another wave to the upside, and it is actually turning back over again from that resistance level in that channel. And the long-term trend has just turned down last month. And we are seeing, after sharp selling last month, we're sort of testing the lows of last month's trading right now. So, there is a bit of a chance those long-term or high-yield bonds could sort of accelerate to the downside here. They're looking a little bit sketchy. And that's sort of what I usually want to see before I'll get more bearish and really start to think that things could unravel. So, thinking about these bonds, I just want to quickly show you the German bonds. And I think I have showed you this chart before. This is the German 10-year bond yield chart. And you'll see that for quite a while, yields have been under that zero bound. So that is the zero bound. So the the German 10-year bonds have been trading at a negative yield for quite a while. So you can see here for this last few years, German bond yields have been negative, which is pretty insane. And if you're holding those, if you've bought those yields at a negative yield, and now the ECB is saying they're going to start raising rates, they could rise rapidly, possibly even have 25, 50 basis point moves. And those bonds that you own there, they're going to go down at a rate of knots, the price of those. So German bonds have just kicked just last night, the last few nights, above zero. So let's see how far that goes. Is there going to be a bit of a sharp sell-off in those German bonds? So that's definitely something you need to keep your eyes on. And if we look at the Italian and Spanish bond yield, you can see that we're also seeing a much bigger kick higher in yields. It's starting to accelerate. This is the Italian 10-year bond yield chart. And you can see there, again, that's been around 0.6 of 1% in one of the most indebted nations in the world. Having 10-year bonds at 0.6 of 1% to me is pretty insane. But that's the world we've lived in. And I think, we've had a few false starts in the past, 2016 to 2019, and then bonds crashed again. They got saved. And here we are sort of kicking off to the upside again. So you've really got to watch those Italian and Spanish bond yields to see how they perform as rates start to rise. You can see here as well, this is just the Spanish yields. They're really starting to kick higher here now. So that's definitely something to watch. And, that all feeds into those US 10-year bonds. And look, we've been following this pretty closely, haven't we? And if I go into the daily chart for you, and we just look at the levels that I was showing you, was around that 1.9% region. That was the high just a few weeks ago. And it fell down to about 1.7%, but it's still strong and still up near those highs, isn't it? As the yield is strong, which means the price is weak. So at 1.85%, and with worldwide bonds selling off, I wonder if the next leg down in stocks could be caused by those 10-year yields racing through 1.9%. And I've told you in the past that I reckon they are heading to around 2.2% to start off with. If we just have a look at that long-term monthly chart, I'm looking at, that long-term distribution that's been going on, a range, very clear range for the past decade. Got the midpoint of that coming in around 2.2%. And now that we've had this false break and heading up through the highs, long-term trend up, there's not much resistance in those yields. So it's going to be interesting to see how they perform. Now, just moving on to stocks quickly. I will actually move over to my other chart. So this is the weekly chart in the E-mini S&P 500 futures. The main thing I want to focus on today is the fact that on the weekly chart, which is what this is, you can see if we're looking at those moving averages and we're just following along here for the past, few years, I've got the 10-period exponential and the 20-period simple, a very simple moving average crossover idea there. I don't trade off those, but I do get a sense of the trends from them. And what I want you to focus on is how well the weekly trend has been picking the market for quite a while. And you can see these long trends when that 10-period exponential is above the 20-period simple. That's in that weekly uptrend. And, we've got the downtrend, the uptrend there. That's been for 20 months. And it has actually just crossed to the downside. So the weekly trend has turned down in US markets. And what I want you to notice is once prices turn down and that weekly trend turns down, you very often get a retest of those moving averages. So that's like a mean reversion move, which tests out, is the selling pressure really there? And after that weekly trend has turned down, often once it goes back to that 20-week moving average, that can be a spot where the beginning of the real sell-off begins. It happened back in late 2018, and then we had a big sell-off there before prices turned back up. And then during the crash in 2020 as well, you'll see we had the initial wave down, and then prices rallied all the way back there to retest those moving averages. And then once it turned down, that went into the crash. And that is pretty much where we're at. We've had this impulsive move down. We've had a squeeze back to the moving averages. Now, is the selling pressure there? That's the question. And if we do turn down and break below the lows of the move, boy, that's when things can really go pretty bad. So I've actually been using this as an opportunity to lighten the load a bit, take some profits, close down positions I'm a bit bored of, and just to see what happens here. Look, it could end up taking off. That's all well and good. It's just, for me, this is a point where the risk is high, and it's a good opportunity to just lower some risk, because if it does turn down, the downside could be very large. So it's just a point where it's worthwhile lowering risk to see what happens here. So really, that's the main thing I wanted to focus on. Oil prices have been really strong, and I've been telling you about that for a while, saying that the breakout in oil prices, this is a very long-term chart of oil going back decades, and I've shown this to you in the past. We're just looking at the buy zones and the sell zones of the oil price there, and the midpoint, which is the important point, the point of control. And we're busting up through there. So we've had a very strong rally out of the buy zone. The trend is very strong, and we're busting up through the highs from 2018, and there's just not much resistance up here. So unless prices turn back down pretty soon, this could end up getting a bit of a wriggle on above $100. So I'm keeping my eye on a few stocks, and just to remind you, from a few weeks ago, I did tell you about a little stock, which is not so little, Beach Energy. Was saying that it was just starting to set itself up quite nicely, and it is just getting quite close to turning back up into long-term uptrend. We're just sitting around resistance around $1.50, and I just reckon once it can kick above there, you're probably going to get this thing starting to move to the upside again. And the main analysis of this being the long-term wave that we saw there back from 2016 to 2019. And I'm just interested in, looking around that buy zone area and picking it up once you get momentum starting to shift back to the upside. So it's looking pretty interesting for a bit more upside, I reckon. So there you go. There's one stock to have a think about. But yeah, turn up for the presentation next week and you'll get an actual trade that I've sent out to members of my service. So I really do hope that you sign up for that. So that's the hard sell for today. I will definitely come back with more next week, and check out what I'm doing. If you can see the links below the video to check out ASI and Pivot Trader, and hopefully join up. All right, cheers. I'll come back with more next week.